I think it's important to first remind of what are the policy actions that we have actually taken in response to this inflation shock. And as far back as August, September 2021, Bank of Jamaica adopted a three-pronged policy strategy. One, we increased our policy rate, that is the interest rate that we pay on deposits that commercial banks hold at Bank of Jamaica. We increased those to 7%. And this was meant to signal to the banks and the financial markets in general that higher interest rates are now warranted in the economy. The other aspect of our policy strategy is that we tightened the amount of Jamaican dollars, or what we call the money supply, that is available in the financial system. The third aspect, we were more aggressive in the foreign exchange market in terms of our sales of foreign exchange to the market. Now, we also complemented that three-pronged strategy with an aggressive communication campaign. Now, these three actions have resulted in a significant reduction in the volatility of the exchange rate. These actions, the increase in our signal rates and also the tightening of Jamaican dollar liquidity, are also intended to reduce or slow the amount of credit that banks provide to businesses and also to households or consumers. In addition, they're also intended to encourage savings by household and Jamaicans in general. Now, we have not been seeing the sort of slowdown in credit by the banks that we have envisioned. And as we've indicated previously, this is a concern. However, we know that credit conditions have actually started to tighten in the economy, and we know that banks have been increasing some of their lending rates. So as the monetary policy begins to take effect, we expect to see some slowing in credit growth.